Ladies and gentlemen, now they're talking about the possibility that banks and Wall Street shutting down because of the coronavirus. You know, I actually lived through something similar to this. When Hurricane Sandy hit in my state, the banks were closed for a couple of days, and the ATMs, they were not working. A lot of them were down after, such a powerful hurricane. And I remember people's reaction and how they were scared. Now, ladies and gentlemen, I was not petrified over that because I had went to the bank prior to the hurricane hitting, like a few days before. So I had emergency money just in case I had to get out of here. But there were a lot of people that were literally stuck and they didn't have anything, and they thought they could just conveniently go up to the bank, use the ATM, and those ATMs were down. Now this is a whole different situation. So if these banks and Wall Street shuts down, you look, these folks running to the store right now is small time compared to how big it could potentially be. Right now, ladies and gentlemen, banks are moving their staff out of Wall Street because of the possibility of getting coronavirus. I mean, look, everybody working there, they're people too. They're not above getting a virus because you got money invested somewhere. Get real. So I just thought that was interesting. And I was like, wow, a Wall Street shutdown would impact the entire globe. There are countries all over the globe invested on Wall Street here in the US. So you're talking about something catastrophic if this thing shuts down because people are too sick to be there. So this article came out on CNN Business March 10th, 2020. Could coronavirus shut down Wall Street? Banks begin moving staff out. Wow. US stock markets were halted briefly Monday as a record fall in oil prices and fears of the CV, almost caught myself there, triggered panic and selling. But the epidemic poses a much bigger logistical headache for Wall Street. How to keep trading going if banks have to evacuate their offices to fight the spread of the illness. Global banks are already scrambling to split their workforces to reduce the risk that large number of employees fall ill, and testing backup sites to ensure they can continue doing business even if they can no longer access Wall Street or locations central in cities around the country and in places like London. JP Morgan Chase has started dividing its sales and trading teams between separate offices. It holds employees in an email. It told employees in an email that this is precautionary measures to make sure the bank can continue to run smoothly. The firm runs alternate sites in Brooklyn and New Jersey. Wow. Mm-mm-mm. Bank of America said it is splitting its fixed income equities trading teams from Monday, sending some to a backup site in Stamford, Connecticut. Deutsche Bank said it has split some London operations and trading teams with some employees working from home. Traders at Goldman Sachs have ramped up testing of their ability to work from home and alternate sites, according to a source familiar with the investment bank's plan. HSBC, wow. You just thinking about all these banks having to shut down is mind-boggling. If it starts spreading real badly, which had deep cleaning to its floors in its London headquarters last week, and sent some staff home after an employee contracted the virus. And said it had invoked split state working arrangements for its team in Asia, and it does not expect any disruption to services in Europe. Well, you don't know that for certain. Our business continuity plans are working as planned. This includes provisions for teams to alternate working from the office and from home to limit potential exposure. Okay, so that's just the statement they put out. Still, the CV pandemic poses the biggest logistical challenge for the finance industry since Hurricane Sandy, yeah, which I experienced in October 2012, and before that, the terrorist attack on 9/11 in 2001. Operating large dealing rooms where employee crowds to trade stocks, bonds, currencies, and commodities is looking increasingly, that's a dangerous situation right now because crowds have now proven to always have an infected person or two in the crowd. I mean, that's how we have seen that actually repeatedly. Soon as you have a crowd, somebody is going to walk in with that CV. Okay, so a number of confirmed cases of CV in New York and London climbs. That left banks to explore other options to keep trading going while dealing with the global stock market rout. Worse than Hurricane Sandy. When Hurricane Sandy flooded large parts of lower Manhattan, the US primary financial center, trading was suspended on the New York Stock Exchange and NASDAQ for 2 days. That marked the first whole closure of markets since 9/11, when exchanges were closed for 4 days following considerable damage to physical and electronic infrastructure caused by the destruction of the World Trade Center. By the time Hurricane Sandy hit 11 years later, most large financial firms had disaster recovery sites within 50 to 100 miles of New York City. The hurricane caused power outages in more than a dozen states, affecting backup sites even in New Jersey and Pennsylvania. This made it challenging for the financial sector to carry on as normal, especially since many employees were dealing with flooding and electricity outages in their own homes. Likewise, the CV could take a personal toll on a large number of employees at the same time if their children are forced to stay home from school, family members need care, or they need self isolation. That's right. I mean, let's face it, many of those people on Wall Street, they got families. We don't know how many people will behave, but banks are much better prepared for remote working than in 2012. I don't think the markets will shut down because of this, he added. Well, you don't know that. Um, a spokesperson for the New York Stock Exchange said it regularly tests contingency plans to enable continuous operation of the New York Stock Exchanges should any facility be impacted. Technical and regulatory hurdles. Working from home or backup locations won't be straightforward, however. Widespread use of disaster recovery sites or home offices could rise to technical problems as trading software and compliance systems require a lot of bandwidth. And some trading platforms don't allow remote logins. Regulation complicates matters further. To comply to the rules governing markets, calls need to be recorded and compliance teams need to be readily accessible. Wow. When you read something like this, it makes you realize how, if everything falls, this place is really, truly doomed. These folks can put all the contingency backup plans together they want. If this thing start just impacting Wall Street, I just don't see how they're going to do it, even from remote sites. I don't see how they can do this. It is no guarantee that the people that you send to these remote sites are even going to be healthy, you know? And right now, let's be real, the US has not been able to contain this thing. They haven't, you know? And you got Italy, and I just found out, ladies and gentlemen, just listening to a few videos and reading some news articles, Italy is not 100% locked down. Italy is allowing people to get up and go to work every day. So I don't see how their lockdown is going to work. How is that going to work? It's not. But yeah, go look at the articles on Italy. They are allowing people in that country to continue to get up and go to work. To me, that just further spreads it. So that lockdown that they're talking about is very deceptive. It's not what you think. And we already know the 14-day quarantine is insufficient. It does not work. You're still going out here and you're sending people in public to spread this stuff. And they really need a much longer quarantine, but this country has structured itself in money so knee deep, they can't afford to be gone a month or shut the whole country down a month. It will collapse. Now, when they say they have a backup plan, I don't know how good this backup plan is going to be up against CV. I mean, hurricane is one thing, but a highly contagious virus is that's something entirely different. One thing about a hurricane, once it's over, it's over. That's it. But you got something that's spreading and growing among people and people transferring it to other people. That's a whole different thing. But y'all, please tell me what you think. I know they think they got something good here, but do they really have something good? I mean, you have to really think about that. I just don't think they are as foolproof as they're trying to claim here. I think there's only so much foolproofing you can do. There's a video here. I'm going to play the video.
This bull has stamina saying it's awful. In fact, it was a milestone day for Wall Street. Nothing has been enough to knock this market off its perch. The longest stretch of nonstop gains in American history. 11 years. That's how long this bull has been running. Born in the depths of the financial crisis on March 9th, 2009. Since then, the S&P 500 has more than quadrupled. It's the longest bull market in history, a milestone it hit in August of 2018. Impressive, yes, but it's not the strongest bull market ever. It still lags the record advance seen during the 1990s. In its 11 years, this bull has been through a lot, outlasting a debt ceiling debacle, government shutdowns, a fiscal cliff, and more recently, a trade war, worries about a global recession, and geopolitical jitters. Now, the coronavirus may be the biggest threat yet. Fears about a global pandemic have already pushed stocks into correction territory. Goldman Sachs says U.S. companies probably won't see any profit growth this year, and it says a recession isn't out of the question. Other risks to the market loom as well. The trade threat hasn't gone away. Even though the U.S. and China have signed a phase one deal, a full-blown agreement still needs to be negotiated. And it's an election year. Historically, the S&P does tend to rise during the fourth year of a presidential cycle, but Wall Street is bracing for some election year volatility, especially if Bernie Sanders or Elizabeth Warren wins the Democratic nomination. Their policies could represent risk for specific sectors like pharmaceuticals, banks, or energy. So Wall Street is watching as this question grows more urgent. Will this bull make it to 12?
Okay, it just seems like that is kind of lagging behind. Elizabeth Warren has dropped out. But y'all, please tell me what you think. You know, these people are going to keep putting on the fake optimism as long as they can. But the bottom line is, if you can't contain this virus, you're in trouble. Please leave your comment and subscribe. Don't forget to hit on the notification bell, and I'll see you on the next video. Peace, family.